All right, so welcome back to Health Economics. So today what we're going to do is we're going to get into this difference between health care and health insurance. And what I want to emphasize is that so far what we've talked about is a starting point. So by now, you should have at least some understanding of where the prices that insurance companies charge actually come from. They come from the underlying risk preferences and riskiness of the person seeking insurance. You should also have an understanding of why copays exist, why an insurance company might refuse to sell you insurance, and even why they might sometimes deny your claim. None of this is meant to convey that insurance companies are always and everywhere correct or justified. But what I hope is that you can see things from their perspective, at least a little bit. Do some insurance companies do shady things at least some of the time? Of course. But do they all do shady things all of the time? Hardly. The goal of all of this is to generate understanding. If you see someone else doing something that you don't like and you want to truly help them, the first step toward doing so is understanding why they are doing the things that they're doing. The discussions up until now are not meant to absolve all insurance companies of all behaviors. Instead, we should now have the ability to understand their behavior better so that, where necessary, we might be able to help improve things. A lot of what we have talked about so far is why certain things are unlikely to work. This is why economics is often called the dismal science. We are professional skeptics. Most of the time, we can't answer the question, what should we do? But we can give very good answers to, where will this plan likely go wrong? This is valuable, though often not all that appreciated. So what are the differences between health care and health insurance? Many people are under the false pretense that just because they have health insurance means that they automatically have health care, or just because they purchase more or more expensive or more inclusive health insurance that they're going to have better access to health care. That's not necessarily true. Health care is the actual treatment of diseases, illnesses, injuries, or anything else that would be taken care of by a medical professional. Health insurance is, as we've discussed, the idea of guarding against risk in terms of your expected income, in terms of how much health care you're actually going to need to purchase. Having health insurance doesn't mean that you're going to have health care. Just like having automotive insurance doesn't mean that you're going to have a better car. It simply is a safeguard against the uncertain future. Health care is what we are oftentimes most concerned with. I think it's fair to say that many things in the health care industry in the United States and around the world are under both tremendous pressures and are cracking, and is evidence that a lot of the health care systems are broken. What's been really interesting, though, at least in the terms of the United States, is that we've attempted to fix health care by increasing the amount of health insurance that people have. This goes back to, once again, the confusion of health insurance being the same thing as a discount card. It is not that at all. Health insurance is not a discount on health care that you have to pay for. Health insurance is a means of protecting yourself from uncertain future medical bills. It is not an attempt to lower your out-of-pocket expenses. In fact, when health insurance is done correctly, health insurance actually costs you more than the medical care that you would actually be purchasing. So it is not meant to be something that lowers the cost of health care at all. It is not designed to do that, and it is not meant to do it, nor is it good at doing that, which is something that I think we've all seen in the last 20 years in the US healthcare system. Health insurance is not an input into buying health care. Health insurance is a safeguard against uncertain or risky future expenses. If you want to increase the affordability or the availability of health care, having people buy more health insurance makes almost no sense whatsoever. It is not meant to lower the cost of health care. Instead, what we should be doing is trying to figure out a way to increase the amount of health care that is available in this country and in the world, while also lowering the price so that everyone can afford it. It should be no secret that pretty much everything in the world is cheaper today than it has ever been. This is true of housing, of cars, of cell phones, of pretty much every single thing. There are only 3 exceptions, and those 3 exceptions are college tuition, college textbooks, and healthcare. Those 3 industries have seen the prices go up faster than the rate of inflation over the last 60 years. Everything else, food, water, shelter, the basic necessities of life, have actually become cheaper, both in terms of their real monetary costs, which means inflation adjusted, and also in terms of the amount of time one must give up in order to earn enough money to purchase these things. Everything in the world is cheaper, with the exception of healthcare, college tuition, and college textbooks. One of the things that we want to do in this class in particular is try to get to the bottom of why, and specifically why healthcare has gotten so expensive.